Welcome back here with us on Bazaar Morning Call. Let's get into our first conversation on the show today. We have Ed Yardeni joining in to talk about the global setup, which has been looking fairly buoyant. No problems over there. Mr. Yardeni, good to have you on the show. Thanks very much for taking this call. So the US market, it continues to rocket higher, propel higher, and gold is doing its own thing. Oil is crashing. So very dramatic moves across different asset classes. What do you make of it?
Well, look, much of this depends on what's going on in the United States, particularly with the Federal Reserve, and of course, with the geopolitical situation. I think what we're seeing with gold, especially, is a geopolitical issue. Ever since the United States put sanctions on Russia, I think the Chinese have been buying gold, and so I think that explains why gold is doing so well. And here, in terms of why our stock market's doing so well, the economy is doing extremely well, and it's not even clear that the Fed needs to lower interest rates, but it did, and that's bullish for the stock market.
Got it. Ed, by the way, I don't know if you saw that latest Stanley Druckenmiller interview on Bloomberg, and he's been of the view that maybe the 50 basis points was a mistake. It was an interesting one. But what do you make of the 2 weeks to U.S. elections, Ed? Do you think betting markets all favor Trump now? You think it's positive dollar, positive yields?
Yeah, I don't really think we can go with any of these indicators. I think it's going to be a very close election. My concern is that's actually a risk for the market. If it's too close and there's some conflict about who actually won, that would not be good for the markets. The other possibility is it'll be a sweep for the Democrats or for the Republicans. That would not be good for the markets. The best outcome would be a gridlock situation where either Trump or Harris is in the White House, but they don't have the House and the Senate. That they still can't get all their policies through. The problem with both candidates is that they don't really care about deficits and they don't care about the inflationary consequences of their policies. I think that's where the risk is in the market. Domestic politics and geopolitics are the main risks for the markets. The domestic economy is doing fine. I don't think the Fed really needs to lower interest rates anymore. I think I discussed this before. I'm in the none and done camp. I don't think we need a rate cut in November or December.
I recall you saying that, Ed, you're in the camp that believes that maybe we don't get another rate cut this year. But what about on the S&P 500? We have been chatting all through the year, and I think you had a target of around 5,800. We're already trading above those levels, and the S&P 500, I think, is on a 6-week winning streak. Where do you think we'll end the year? A bit of, should we see a melt up, so to call it? Should we breach for 6,000 levels plus?
Yeah, we've been talking about the possibility of a melt up, but it hasn't been our most likely scenario. But we may change that opinion. When the Fed cut the Fed funds rate by 50 basis points, we actually raised the odds of a melt-up from 20% to 30%. We're right now staying with 5,800. We think, yes, sure, and that would be by year end. That doesn't mean that the market couldn't continue to move higher here to 6,000 or even a bit above 6,000. But as I said, I think we're entering a period here where there's going to be a lot of geopolitical and domestic political uncertainty. As we saw in the headlines, Hezbollah sent a drone to assassinate the prime minister of Israel. And meanwhile, Israel's considering what they're going to retaliate against Iran. So there's a lot of geopolitical risk. And at the same time, as I indicated, the domestic political situation could be quite unsettled, even once the election is complete.
Yeah, and for now, at least, the equity market is not looking at these risks at all. It's only focused on the economy, which is doing quite okay, like you said, Mr. Yardeni. Thank you for joining in. Let's see how this plays out. Appreciate you being with us on the show this morning. All right, that's the global setup. No problems over there. It's all about earnings.